How home insurance works. Once you have found your home, you should start thinking about homeowners insurance. It's essential to convince homeowners insurance to be backed by the purchase of a mortgage. It's highly recommended as your home is to be among the most important financial investments you'll ever make in your life. Many homeowners don't know the difference between the different kinds of homeowners insurance or spend the time to study the specifics. The shocking figure is that 50% of the policyholders do not know all the details about the total amount. This includes details like what's covered and the amount of homeowners insurance they'll need. That's understandable. The homeowners' policies can make it difficult to understand. This is why we're here to lift the curtain and clarify the details of home insurance for owners in simple, straightforward terms. Homeowners insurance is made up of protections that allow you to fix or replace your property and home if it is damaged by a specific risk such as burglary or fire. Also, it helps to cover the expenses if you accidentally damage someone else's property or if someone is injured while visiting your residence. In contrast to owning a car, you'll be able to purchase the home you want without insurance legally. However, your lender may require some form of insurance. Insurance for homeowners provides financial protection to your personal belongings and family members from theft or damage. However, it's not legally mandatory. In general terms, you should expect to pay around $35 per month for every $100,000 worth of property value, but it will vary on your state and the city in which you live. The costs will vary based on the insurance company and state, which is why it's important to shop several insurance policies. The majority of householders' insurance policies offer a minimum of $100,000 in insurance. However, larger amounts are offered, and, in increasing, homeowners should think about purchasing at least $300,000 to $500,000 of liability insurance. Homeowners insurance provides financial protection, with a monthly mean at $116. Allstate offered the lowest cost home insurance. Liberty Mutual was the second cheapest, offering a monthly fee of just a single dollar. Same as all states. If you don't have a homeowner's insurance contract, there's no protection in case the house is damaged by. In the event of a catastrophe, you could be forced to cover replacement or repair costs out of your pocket. This is the risk without an insurance policy for homeowners. You don't seem to be covered if something happens to your home. Your homeowner's insurance premiums are most often determined by your home's insurance value or the limit of coverage for dwellings in the policy. It's usually a component of the system that compensates the homeowner for damages that are covered to the structure of your home. Your home is just an overhang on your head. It's likely to be your most valuable asset and one that you aren't able to afford to exchange out of pocket should disaster strike. This is why safeguarding your investment with the proper homeowner's insurance coverage is essential. What is a homeowner's insurance? Homeowner's insurance provides financial protection if an incident damages your property, home, or personal possessions. The policy also covers you if you are blamed for an injury or accident. It has three primary purposes: repair your home, yard, or other structure, repair or replace the personal belongings you own, insure yourself against personal liability in the event that you are legally liable for damages or injury caused to another person. The homeowner's insurance isn't required by law, but if you're a homeowner and your lender is likely to need you to insure your home to protect its investment. If you're not a homeowner, the insurance of your home is nearly always a good investment, providing the homeowner with liability and property insurance. Types of homeowners insurance. Homeowner insurance can be found in various types that are referred to as policy forms. Some types offer more insurance than the others, and it's important to know the distinction. Details can vary according to state and business, and these types are considered to be pretty standard. Most popular, Ho3 insurance. Ho3 insurance H0-3 insurance policies, often referred to special form, are quite different from the most common. Insurance Ho3 accounted for almost 80% of the insurance coverage for homeowner-occupied houses in 2001. The last year in which information is available, as per the National Association of Insurance Commissioners. If you're a homeowner with a mortgage, your lender is likely to require an amount of this kind of insurance. The Ho3 insurance policies will cover any damage to your home due to any reason, with the exception of those that which the policy explicitly excludes, for example, such as an earthquake or flooding. But when it comes to your belongings, an Ho3 insurance policy usually will only cover damage caused by the 16 named perils unless you buy additional coverage. Lightning and fire, smokes, windstorms, explosion, riot, damages from the aircraft, the damage caused by car accidents, theft, the weight of snow, ice and sleet, aircon, water overflow, plumbing and other appliances, freezing of the same systems in the home, damage that is sudden from the influence spike, the sudden tearing, cracking or bulging in a device such as steam system, air conditioner, or the fire protective system, and tearing, cracking or bulging in a device such as steam system, air conditioner, or the fire protective system. See spike, the sudden tearing, cracking or bulging in a device such as steam system, air conditioner, or the fire protective system. Broadest coverage, Ho5 insurance. The Ho5 insurance is the most homeowners coverage that is comprehensive. It covers damage caused by any cause, excluding those that the policy does not cover. Insurance for Ho5 accounted for around 14% of the house owner's coverage in 2017, which is as per the NAIC. It's generally only available for clean, well-maintained homes in risk-free regions, but insurance companies don't all provide this type of insurance. The Ho5 policy is referred to as comprehensive form or premier coverage. However, an Ho3 plan may also be described as premier in some cases. However, it does not offer the broad scope of coverage offered by an Ho5. If you liken the amount of money that is Ho5, be sure to inquire with your representative or agent. Limited coverage, Ho1 and Ho2 insurance. Less well known are the Ho1 and homeowners insurance called Ho2. These are only liable for damages that is caused by the conditions listed in the policy. These two types together make up approximately 7% of homeowners insurance. The Ho2 insurance, which is the most typical of the two, typically covers your home and possessions for only the reasons listed above. The Ho1 form, which isn't readily available, is the least basic type homeowner insurance. It will cover the losses of a much shorter list of risks as compared to the Ho2 form. Other types of policies include renter's insurance, Ho4, as well as Ho6 insurance for owners of condominiums, and Ho7 that covers mobile houses, and the Ho8, which is the least used of them, with the most limited coverage for older houses. What's not covered under homeowners insurance? Even the most expansive homeowners agreement doesn't cover every single thing that could likely go wrong within your house. For instance, you shouldn't deliberately damage your home and then expect your insurance company to take it on. Insurance policies also do not cover damage from other reasons, like flooding, which includes drains or sewer overflow, earthquakes, landslides and sinkholes, infestations caused by vermin, birds and fungus, wear and tear or negligence, nuclear hazard, government actions, including war, power interruption. But you'll need separate insurance to cover a handful of these dangers. Flood insurance and earthquake insurance is offered separately in states that are prone to hurricanes. It is possible to purchase or desire windstorm insurance. Contact your insurance company for advice regarding damage or events that your insurance doesn't cover. In many instances, you'll need to add so-known as endorsements, typically costing an additional amount to give you greater security. How much homeowners insurance does one need? It is essential to have enough homeowners insurance in order to cover the cost of rebuilding your house if it's damaged. The amount of insurance will depend on the local costs for construction. Do not focus on how you paid for the property or the percentage you have to pay on your mortgage, the capital levy assessment, or the amount you'll receive in the event of selling. If you base your coverage on these numbers, then you'll be paying the wrong amount of insurance. Instead, you should set the dwelling insurance limit to the cost to rebuild. You'll be sure that you'll have enough money for repairs and will not be paying for more insurance than you want. To calculate the rebuilding cost, you need to multiply the square area of your house by the construction costs local to your area for each square foot. Your insurance agent or broker will be able to assist you in calculating the cost. If you're looking for personal property, you'll typically require coverage limits that amount to at least 50% of the dwelling coverage. Your insurer could decide to set the limit automatically. That is the best way to go. You can reduce the amount if necessary, or get additional insurance in case you feel that the amount isn't enough to conceal your possessions. A thorough inventory of your house is the most effective way to determine the amount you could be that you want to change all your belongings. A list of items can be helpful in the future if you are required to file and claim and want to know exactly the things you've lost. It is possible to create a listing or, as an easy inventory hack, capture the video of your house and all your belongings by using your smartphone. Are you required to take a video in order to claim at a later date? This can help you make your claim. Home insurance deductibles. Homeowners insurance policies usually have a deductible on insurance, the amount you're required to conceal before the insurer begins paying. The deductible could be a dollar-based amount, such as $500 or $1,000. A percentage, such as 1% or 2% of the home's insured value. If you get a check for a claim that is issued by the insurer, it subtracts the deductible amount. For instance, that you have $1,000 in deductible, and your insurer accepts the claim for $10,000 in repairs, they'd pay you $9,000, and you'll be responsible for the rest of the $1,000. The next deductible you choose will lower the cost. You'll be liable for more cost if you have to submit claims. In contrast, the lower deductible implies that you may not have to pay the next cost, but the insurer will be responsible for the whole amount following the event. Be aware that certain policies offer separate and often higher the deductibles for certain types of claims. Damages caused by hail, wind, or hurricane. For example, an insurance policy may have an deductible of $1,000 for many loss. However, the 10th one is for earthquake coverage, which is an optional feature that was added to the policy. So that if an earthquake causes damage to an apartment with $300,000 worth coverage, the deductible will be $30,000. In general, liability claims don't require the benefit of deductible. Replacement cost versus actual cash value. If your home is damaged, the homeowner's depository financial institution isn't going to issue you the amount that's stated on your policy. The amount you receive could vary based on the cost of rebuilding as well as the insurance policy. You select and the amount it will be paid to the contractors who are rebuilding your home in many instances. The most important decision is to choose a coverage plan that will pay for whatever it takes to build your house, whether or not the cost is greater than the policy's limits. In this instance, the situation could arise in the event that the cost of construction has been rising in your region, but your coverage remains at a minimum. Here's a brief overview of the choices you'll have. Actual cash value. Insurance covers the cost of replacing or repairing the damaged property, less an allowance for depreciation. The majority of policies don't use this method to cover the home as a whole, but it's common for personal belongings. For objects that are more than years old, that means you'll likely get only the fraction of what it would cost to purchase new ones. Available cost value. The insurance covers repairs to homes using materials that are comparable but may be less expensive. For instance, damaged walls of plaster could be replaced with drywall that is less expensive. Replacement cost value. Insurance covers repairs to homes using materials that are of like kind and quality, which means that walls with plaster will be replaced with new plaster. The amount paid does not exceed the limit of coverage for your dwelling. Some insurance companies offer cost value protection for your possessions. It means that the insurance company will be able to replace your items with new ones, but with no deduction in depreciation. Insurance companies offer cost value protection for your possessions. This feature is important to you. Make sure to verify the policy's terms prior to buying. It is typically the norm, but you may have to pay for it. Extended cost value. The insurance company pays the amount of your coverage for your home within a specific amount if you need to fix your home. The limit can be a dollar amount or the equivalent of a percentage, for example, 25% more than your home coverage. This gives you an insurance policy in case rebuilding is more expensive than you anticipated. Guaranteed cost value. The insurance policy covers the cost of repairing or replacing your home following an insured loss. It doesn't matter if it is greater than your insurance limits. Some insurers do not provide this coverage. How much does homeowners insurance cost? Insurance for homeowners cost an average of $1,211 per year in 2017, which is consistent with the most recent information provided by the NAIC. However, the cost can be more or less, depending on the area you live in and the amount of insurance you receive, as well as you build credit and your home's worth. The average rates varied between $690 per year for Oregon up to $1,943 for Florida. Calculate the price of your home insurance policy. The insurers usually consider: what will it cost you to rebuild your home? Condition, age of your home and other features. From where you live to the nearest water source. Fire protection rating of your city. Your claims history, and consequently, the claims history of the neighbors around you. Your coverages, limits and the deductible. Things that present a serious danger of injury, such as trampolines or pools. If you think your premium is excessive, there are many methods to cut down on homeowners insurance. In fact, many insurance companies offer discounts when you bundle your home or auto insurance. Also, you'll be able to get a lower price for using standard safety features such as burglar alarms and deadbolt locks. It's always a good idea to shop several times and compare homeowners insurance quotes to make sure you're getting the best price. Homeowners insurance can feel incredibly overwhelming. Before you become too concerned about your insurance's worth, take note that this insurance policy gives you large value for the money. The price you pay is just only a fraction of the expense of building your home starting from scratch and replacing your belongings. For many who are new to the idea of insurance can be a bit overwhelming. What is the best time and reason to push for coverage? And how much your policy will cover is an attractive proposition for any category. However, homeowners insurance can be very overwhelming. This is due to the fact that the homeowners insurance policy covers numerous aspects, a building that is similar to the contents of your home within it, belongings that are far from your residence, and your liability for any accidents that occur at your home or with your pets. As overwhelming as it might seem, it is essential to be aware of the fundamentals of homeowners insurance policies. If you've taken out a loan, you'll likely require homeowners insurance to meet the requirements of your loan. This means you'll be able to rebuild in the event that something occurs. It's also up to you whether or not don't have the obligation to buy homeowners insurance. You may be considering dropping coverage. You should be armed with all intel you'd like to convey to the caller. If you accept your claim, it will be replaced and repaired to your house. The insurer will give in its name is called the benefit or payment. The insurer will assess the amount of the claim and will provide the amount of assistance that is acceptable under the terms of your insurance contract. Thank you for watching.